Hello and welcome back. I'm Daniel Westergaard. I serve as the Chief Investment Officer here at O'Connor Financial Group. And today we're looking at a chart called Stocks 1. This chart is appropriately titled, as you'll see on the screen, as we look at different investment options and different asset classes that we can invest in. And we're going to look back at them over a period of time from 2007 until today. The reason we're looking back to 2007 is it was right before the global financial crisis in October of 2007. So what you'll look at on the screen here is this chart shows us that if you had invested on the very worst day, at the very peak of 2007, I believe the date was October 9th, what would have been your subsequent returns on a cumulative basis? So you would have had in equities or stocks, you would have had about a 50% decline from that initial investment. But now if you look at the end of the story, you'd be up over 400% in a cumulative return. What that looks like on an annualized basis is a return of about 9.8%, so just below 10%. So the point of this chart is to show that stocks have done better than every asset class over the last 18 years, even if you had picked the very worst time to invest in stocks. And I want to illustrate that point just a little bit further here in the chart. A lot of people ask us, well, isn't it more safe to keep my money invested in cash? And if you look at the data points for cash, you would never have had a decline as big as 50%, but your annualized return was barely over 1%. So now if we compare that 1% in cash to the one that says CPI, this measures inflation or our purchasing power over time. Inflation was about 2.5% over the same time frame. So in the last 18 years, you lost about 1% of your purchasing power had you held cash versus inflation. Another one we get asked about often is, should I own bonds or fixed income? If you look at the 10-year treasury line here, that averaged about 2.7%. So you just barely beat inflation over the last 18 years, even though it's what would be considered a safer investment or a little bit more stable. So when we're building and constructing portfolios, it's important that we own stocks in our portfolios because over time they've given us one of the best long-term drivers of growth in the last 18 years. And we can't be sure that that will continue, but looking back at history is always helpful when we consider what our investment options are and what to do with our money. Thanks again for joining us.